Welcome to Stony Finance Lab channel.
Hi everyone, my name is Jeffrey and I'll be representing the group to talk about our project, a retiring early strategy. In this presentation, we will discuss about building a portfolio that aims to achieve the goal of buying a house and save for retirement. We will be defining and explaining how you could use a Roth IRA to save for a down payment, as well as defining what a real estate investment is and how to invest in one. We will also be explaining the investment strategy for this portfolio. Now, the purpose of this presentation is to provide a financial plan for our target audience. These are recent college graduates with jobs that provide an adjusted gross income of $70,000 or more if single, or $140,000 or more if married, and are aiming to own a house that's worth $500,000 or more in 10 years while also hoping to save for retirement. The investment vehicles we plan to use are an investment in equities and in real estate investment trusts through a Roth IRA account. One way we plan to reach our goal is by looking at real estate investment trusts. REITs are companies that own and in most cases operate income-producing real estate. They give individuals the opportunity to invest in these real estates. One major reason to consider investing in real estate is because of the fact that REITs have multiple owners. It provides a way for individual investors to earn a share of the income produced through commercial real estate ownership. You can invest in REITs through publicly traded REITs, as well as REIT mutual funds and REIT ETFs by purchasing shares through a broker. You also have the option to buy shares of a non-traded REIT through a broker or financial advisor that participates in the non-traded REITs offering. However, there are some risks to consider when handling REITs. One occasion is when investing in non-exchange trade REITs. There could be problems like lack of liquidity and share value transparency. Therefore, we will be focusing on investing in traded REITs, which in the graph shows that REITs have trounced the S&P 500 for the last 2 decades by around 40%. We will also be looking to use Roth IRA. As you may know, a Roth IRA is a retirement account that is funded with after-tax dollars, and the account can be withdrawn after retirement on a tax-free basis if certain conditions are satisfied. Roth IRA has a 5-year down payment rule for first-time home buyers, which individuals are allowed to withdraw up to $10,000 for house-related expenses, such as down payments and renovations. Roth IRA also allows you to withdraw your contribution tax and penalty-free tax at any time for any reason, as long as if you held the account for at least 5 years and have not withdrawn more than $10,000. Our investment strategy is to open a Roth IRA account and then invest in S&P, NASDAQ ETFs, real estate investment trusts, and crypto. In 1 to 2 years, we plan on saving $20,000 to $30,000. 3 to 4, increase the portfolio investment by another $30,000. 5 to 6, increase it by another $60,000. 7 to 8, increase it with another $60,000. And finally, 9 to 10 years, and another $60,000. By doing so, we look to forecast in 10 years an average net of $560,000 in our portfolio with an average return of 15%. Here's some of the historical data below that shows total performance in what we plan to invest in and how the expected growth of these investments shall be forecasted. In this graph, we see that NASDAQ and S&P 500 showing continuous growth since 2019. We forecast that the growth shall continue, so we suggest that our target audience consider these investments. On the right here, we see a close-up of S&P 500 reaching 2.01% on their total returns. Down on the bottom left is a graph showing us the recent importance and relevance of Bitcoin and how we should consider this opportunity. On the bottom right I like to clarify the importance of REITs because of their growth over the past 2 decades. Remember that this is a long-term investment. Therefore, common mistakes to avoid are 1. Panic selling. This happens when investors sell on high volume when price of stock rapidly declines. Some ways in which we can avoid this is to avoid emotional investing and remember that you have not lost any money until you sell, and to consider that the market always bounces back. Another mistake to avoid is chasing market trends. This refers to building a portfolio based on occurring developments or trends because chasing the market strategies can be profitable only if you are investing in a large amount of capital in a short period of time. When investing in REITs, the most important thing to avoid is fraud. Both the publicly traded and non-traded REITs should be registered with the SEC, and you have to verify a REIT through the SEC's EDGAR system. And that is our presentation on our early retiring strategy. The key takeaways to consider is REITs and the use of an Roth IRA account if you plan on purchasing a home. Here's our reference. Thank you for listening, and remember to start saving.
Thank you for watching this video. Please feel free to like, comment, and subscribe to this YouTube channel.